It has been an interesting topic that has come up for public debate is about privatization of some of the public sector banks. In the process of transformation of the banking system, initially the 27 public sector banks which were there at the time of nationalization of banks have been brought down to 12 banks. It is a fact that though India is the fifth largest economy, of course after the pandemic the number and the ranking may change, but notwithstanding that, India is the fifth largest economy. Going by that statistics, we should have at least 6 banks in the top 100 banks of the world. But as of now, we have only one bank in the league of 100 top banks of the world, that is the State Bank of India. Despite merging many of the public sector banks and bringing the number down to 12, the asset size has not been so high that it can find a place in the top 100 banks. Now, there is a lot of debate about privatization as a solution to ills of the public sector banks. But my argument for and against will be able to open a public debate on whether is it the most ideal model to have a private ownership of the hitherto public sector banks. My brief point on these aspects are, right from the time of nationalization of banks in the two spells that we had in 1969 and 1980, many of the banks have been brought under the government ownership for socio-economic development. The intention is to ensure that the last man in the society is able to enjoy the banking system. That objective was pursued after the nationalization, but the impetus actually came when Pradhan Mantri Jan Dhan Yojana was introduced, that is PMJDY, under which we have added about 37 crore bank accounts. And it is quite noteworthy that World Bank, which gives the FINDEX, that is Financial Inclusion Index, has in fact recognized the financial inclusion efforts of India to the extent that India is standing far ahead of even China, even the BRICS countries, Brazil, South Africa, Russia. We are ahead of them as far as the financial inclusion is concerned. 80% of Indian adults, that is according to the World Bank, those having 15 years and above age have an account in India. And nearly 86 to 87% of them have been contributed by the public sector banks. Now, privatization is good. Now, privatization will give a lot of autonomy to the banks to function on commercial lines. But is it the most important requirement that ownership is a reason for banks doing well or not doing well? We have seen in the last 5 to 6 years that even private sector banks, even giant banks, have not been doing very impressive task as far as quality of banking is concerned. They are doing well, but to say that they are doing the best, I think it is open for debate. So what is important for us is to debate the functions of the bank the autonomy to the bank, the regulations of the bank, and the effectiveness of the regulations and the effectiveness of the corporate governance, that is more important, or the ownership is more important. When we go to the PJ Naik committee report, he has recommended the formation of Bank Investment Company, BIC, under the Companies Act 2013, and the whole capital of the public sector banks should be transferred to the company so that it will be privately managed by that company, and there will be no direct interference or direct control of Government of India as the owner. Now, can it not be one of the solutions? I think it needs to be debated. Then the point comes, banks which are in the public sector regime for the last several decades, when they are privatized, the management will change, the board of directors will change, the perception about the banks will change, but will the working actually, will it undergo a change? The embedded value system of the organization, is it going to change? These are all some of the aspects which needs to be looked into, because the history of private banks, of what we have seen, like many of the banks which have not been doing well even under the private ownership, they should be open to scrutiny as to what is the reason before we embark on the task of privatizing some of the public sector banks. Will the change in the ownership drift the operational efficiency of these banks is a matter to be debated, discussed, and to be given a logical sequence before any policy decision is taken about privatization of these banks. Now, it is too early to say whether the mergers have accomplished any of the goals that are set before them, because a year or two is not a period to reckon the performance of banks post the merger. I think it is time for us to watch the performance of the banks which are merged, how they perform and how they come out of the individual identity to common identity and get going in a collective way. And then if big is good, then perhaps we can take the next step of merger, as well as we can also consider or think of the privatization aspects. So, before we embark on the task of privatization, is it possible for us to experiment the holding company model, that is setting up a bank investment company? And we also need to look at, after the formation of BBB, that is Banks Board Bureau, when they have started selecting the whole-time directors of the banks, it was set up in 2016. To now, it is nearly 4 years. We need to see the performance of the whole-time directors before 2016 and after 2016 to see what has been the qualitative impact of the leadership of the banking system, so that we can emulate some of the what you call contributions of BBB for a level below the whole-time directors. So, collectively, what is more important for us at this point of time is to debate about how to increase the efficiency of the banks more important than the size and ownership, and that requires performance management system. If you see the performance management system, the compensation packages, the incentives, the career prospects, the facilities which are provided to the different segments of the banking system, and how they are playing out in the performance of the banks, these require a deeper research to actually understand the nuances of how the banks operate under different ownership, different sizes, and different dispensations, whether the leadership is by the BBB or by the earlier dispensation, that needs to be looked into. It will be logical to go for the further steps of how to go for further mergers or privatization of the banks, as is deemed essential after the study is made. Thank you very much.